Hi everyone, let's talk about the accounting equation. The fundamental accounting equation, also known as the balance sheet equation, is a principle that a company's total assets is always equal to the sum of its liability and its owner's equity. This is also known as the backbone of bookkeeping. Now let's break down the elements of the accounting equation. Assets. These are economic resources owned by an entity. These resources are used by the business to operate and generate profits. So they are investments by the business. The investments the business make in hopes of gaining future value from them. And this includes inventory. There are things that the business hopes to sell. We have cash and we have equipment. Then we have liabilities. Liabilities are creditors' claim on the asset. These are what the company owes its creditors. They are what the company owes its financiers. They are obligation owed to third party by the entity. Like their future obligations the entity has to pay. I borrowed from this bank, so now I have to pay them. Examples include loan from banks, prepayment from customers. So now if I go to a supermarket and I pay for a product that the supermarket do not yet have, that's a liability to the supermarket because now they owe me a product. And we have payments to suppliers, like payments the entity owns to a supplier. That is, they gave them goods but they are yet to pay for them. So those are some of the liabilities we have. Then we have equity, also known as the owner's equities. These are the owner's claim on the business, like the shareholders, the investors, those people who invested in the business. This is the hold on the entity's asset. This is the net asset gotten after deduction of all liabilities and all debt, all obligation. After the entity has settled all of its debts and its obligation, it is what is left. That is what is the owner's equity you get. So now let's take an example. Let's say a phone repairer carries out a repair for 100 naira and instantly receives a cash of 100 naira. So I'm a phone repairer and I carry out a repair for a client, and immediately the client gives me 100 naira back. Now the effect of this transaction on our accounting equation would be assets would have 100 naira and the liability would be zero, and the owner's equity would be 100 naira. So now let me explain. So we have a cash of 100 naira. Remember that the repairer received 100 naira. Why the liability is zero is because the owner of the business, me, I didn't borrow any money to settle any debt. I didn't borrow any money to carry out the repair. So that would remain as zero. And then the owner's equity would be 100 naira as well, because that is the revenue we received. Remember, I received a cash of 100 naira. So therefore, the business now has 100 naira. We've made a sale of 100 naira. So remember that owner's equity is what is remaining after all liabilities have been deducted. Now there was no liability to deduct. So what do we have left? We have 100 naira. So that is the owner's equity. Now let's move further with another example, maybe to give us a better understanding. So we would continue with the assumption of the phone shop. So a phone repairer borrows 100 naira to repair a phone and receives a cash of 150 naira as payment for the repair. So now I borrowed 100 naira to carry out the repair, and after the repair has been done, I received 150 naira from my client. Now the effect on the accounting equation would be on the asset side, and it would also impact the side of the liability, unlike the first example we had. So the initial balance would give us 100 naira on the asset side, and the liability, saying that we borrowed 100 naira, would also be 100 naira in the initial balance. So now when you deduct from the asset side, you have 100 naira and the liability 100 naira. Let me give you a second. What would our owner's equity be? A second has passed. Our owner's equity is 0 because nothing remains after the liability is deducted from the assets. So now we receive a cash of 150 naira, and now our liability would be 0. Remember, this 150 naira now is revenue, and so that would impact the owner's equity. If we, as at when we receive the 150 naira, we didn't borrow any money, that is 0. And now there is no deduction to be made out of the 150 naira, so that would give us 150 for the owner's equity. And that is why our balance in our equation would now be 250 naira to the asset side, 100 naira in the side of the liability, and 150 naira for the owner's equity. So if we have an asset of 250 naira, remember we borrowed 100 naira. That is cash that we received. So now do not think about it as I borrowed this money. No, it is a cash at hand. So that is an asset of 100 naira. And then you receive another cash of 150 naira. That means now I have an asset of 250 naira. Then our liability, we still owe 100 naira. And now if we take 100 naira out of 250 naira, what is left for the owner's equity? That is 150 naira. You can see now that our equation balances on both sides. We have 250 to the side of the asset and 250 to the part of liabilities. I hope this video helps. Thank you very much. If you liked this video, please do well to like and subscribe and share and comment. I love teaching, so I hope you loved learning too. Thank you. Bye. See you next time.